Time for all things money matters now, and the JSE is muted so far today, with its global peers mixed as investors assess geopolitical risks and concerns about Federal Reserve policy tightening. The geopolitical risks still remain elevated as Russian troops remain at the Ukrainian border. Chantal Marx is head of equity research at FNB Wealth. She joins us now for the latest market moves. Good afternoon to you. Thank you very much for joining us. So the rand was higher at 15 rand 6 cents against the dollar, having firmed more than 5% so far this year. What's driving that move?
Yeah, so I mean, the rand is quite strong relative to other emerging market currencies and currencies globally. I think it's the third best performing currency so far this year. And the reason for it is it's a comparative story, right? So when you look at the emerging markets complex, it does seem as if South Africa is a better place to be at the moment. There are some real issues that Brazil, for example, is facing, and some real issues that we are very well aware of that Russia is facing. Turkey not a party at the moment either. So South Africa as an emerging market destination makes sense to investors, and that's why the rand is strong. What's also helping the rand is that commodity prices are very high and that our export basket is therefore priced very highly. So what we call our terms of trade is very favorable at the moment.
South Africa is the country to be at the moment. Let's take a look at this piece of news. Asset manager 91 planned to vote against Heineken acquiring the majority shareholding in Interstell Group. That was happening this morning. Any developments where that is concerned?
So I've been refreshing my Sense feed compulsively, but I haven't received note of how that vote ended. When we looked at it this morning and we looked at 91's response, it was very similar to what our thinking was. We didn't think that the 180 rand was a great deal for minority shareholders. Of course, some of the major shareholders, including Remgro, is actually going to probably hold unlisted stock, which it can do because it's a big company, right? But for individual investors, it's tricky. You don't want to hold unlisted stock. So you end up being forced into taking this 180 rand deal for a share that you could argue would be worth a lot more. Even if you look at the combination of Heineken, South Africa and Distell, I mean, it's such an attractive prospect. It just makes sense. But unfortunately, smaller shareholders won't be able to participate in that if the vote goes how we think it's going to go.
Glencore is set to return $4 billion to shareholders. Talk us through those numbers.
Yeah, Glencore had an exceptionally strong half year, or full years rather, for 2021. They have a mining business and a marketing business, and we knew the mining business was going to do well because commodity prices are quite elevated. The marketing business basically sells on product from Glencore's own mines as well as other mines around the world to end users. And that specific business did exceptionally well. As a result, you saw cash flow improve significantly. They were able to pay down a lot of debt, and they decided that they have extra headroom to give some money back to shareholders. So apart from declaring the regular dividend, they're also going to buy back shares, which in essence is a way of returning cash to shareholders because it reduces the number of shares in issue, which means that shareholders benefit from that. So yeah, a really good result from them, but probably not that surprising given how strong commodity prices have been.
Finally, Spur says it expects earnings to more than double in its half year to end December. Expectations met?
Yeah, I mean, that result came out yesterday, or that trading statement came out yesterday, and it seems as if there's strength across the board. Really a recovery in restaurant trade generally in South Africa, given that lockdown restrictions are much looser than they were in the prior year. I would expect a continued improvement into this year as well, barring we get another big, dangerous wave of COVID-19 or COVID-19 variant, which forces us all back into lockdown again. So not surprising, but really strong and hopefully a sign of more to come.
Chantal Marx, head of equity research at FNB Wealth. Thank you very much for helping us make sense of the market moves.